Today, we are going to use practical examples of scalping with market structure, imbalances, order blocks, and the dragon fruit. I'll talk about two of my real scalp trade executions and try to teach you how to enter a trade and how to find a target. I'll also talk about the most important thing in trading and the things that do not matter at all. If you're ready, let's start. Okay, for the newcomers, we covered market structures, order blocks, and the imbalances. We are improving really well. I'm getting nice emails and Twitter posts about how people start to practice and making amazing profits. For the newcomers, you need to watch the videos in order, because if you miss a video, you will not understand the terms like MSP or BOSS. You may need to watch the videos a couple of times and practice a lot. If you're settled, let's see the examples. Well, people asked me a lot to do a top-down analysis. Let's do a brainstorming today. When I open any chart in any time frame, the first question that I ask myself is, what is the price trying to do? I have three guidance: market structure, imbalance, and liquidity. When I opened the chart at 4 hours time frame, the consensus was a very strong downtrend. I'm a true believer in trends. Do not trade against the trend. However, when you are scalping 1-minute charts or day trade, you cannot just say the weekly trend is bearish and I will only wait for a short. You have to look at the most recent price action. You have to try to understand most recent days and hours. What do you see here? Do you notice the imbalance? In recent days, price was drawn to this imbalance area to correct it and bring a balance to the price. Again, price is always drawn to imbalances and liquidity. So my consensus for the recent price action was this. Price will be a little bit bullish and try to tap this imbalance or fill it, and it could return to be a bearish again. When I was trading, it was not filled or touched yet. Now you can see it. It is fully filled and reacted. Actually, it is a perfect fill. Now let's go in a low time frame and analyze more. Now let's check out the 10 minutes chart. Price was in an obvious uptrend, an extremely strong uptrend, forcing itself to fill the 4 hours imbalance. The imbalance was like a giant magnet pulling the price. You can see that price kept leaving large imbalance areas. All I had to do was wait for a strong pullback. People ask me if I wait all day long. No. When I opened the chart and analyzed it, it was already pulling back to this area. All I had to do was set an alarm and wait for it while I was working with my other jobs. Why does this one have a great setup? First of all, the quality of this break was amazing. It is so fast and really strong. It leaves pumping and large candlesticks behind. It leaves an imbalanced area behind. There are not many red bars during the pump. There are strong closing points above the break. As you can see, the pullback was filling all these imbalances to balance the price. Furthermore, it was leaving these giant imbalance areas for me as targets, so I could use them. Finally, the price came down and tapped the imbalance area in my entry zone. If you check out the coffee example from the previous imbalance video, you'll see the same thing. What I used here was the exact setup that I taught you in the imbalance video. Now, let's check the lowest time frames for micro entry points. Here is the first thing that you notice is the tap to the imbalance zone from the 10 minutes chart, which was the high time frame imbalance. Now, the next thing you do is wait for the market structure to break. This is a relatively strong market structure break, But what I look for is the imbalance areas. As you can see, it is a dragon fruit combination of imbalance and order block. From now on, you have two choices. First choice, wait for a pullback and confirmation candlestick like a pin bar or hammer and do a manual entry with a market order. Second choice, you set your stop limit order with risk management, risk-reward ratio, to imbalance or order block area and wait for the price pullback and fill your order. I always like imbalances more than order blocks. It's just my personal choice. This is how I become more successful. Where should you place your stop loss order? Well, for me, in this trade, the most ideal place was below this order block area. Now, for the target, my aim was this giant imbalance area. Imbalances just work really well. Go and backtest it, please. However, there were equal highs, which is a form of liquidity. And market makers were going to hunt these equal highs. This was just my idea. And the price started to drop before reaching the imbalance area after liquidity swept. This is when I took profits because, as I said, my main goal is making money. I do not care about being right or wrong. I care only about making money. Now let's talk about the second trade that I took. When I saw this powerful and really high quality break-off structure, it was a good indication of a possible trade. Because liquidity was taken before and price pulled back. And the big imbalance area was not touched yet. It was staying there as a target. My idea was simple. Market maker was going to target this imbalance area in my mind. Some people ask me how do I know? I think this is an irrelevant question. Of course I do not know. I just prepare setups and execute. It may work or it may not work. Okay, both had a really high quality and impulsive move. The problem was that there was no imbalance in the entry zone, which is below the break, only the order block. So before entering this trade, I had to wait and watch the price action. Price comes to my order block area, which is nice. A very beautiful red hammer, and price reacted. But I was still watching it. I was not sure if it was fake or not. Once I see a bit of consolidation, I decided to take the trade with a tight stop loss. Unlike the first trade, I used a small amount of cash and made a manual market order entry. My stop loss was under this hammer, and my target was this giant imbalance area. As you can see, it worked really great with an impressive profit. Recently, I asked a question about risk management and stop losses. I wanted to point out one simple thing. You can even make money with a 30-40% win rate. If you use stop losses, that's it. I do not care about win rates, the most useless thing ever. If I make money with 25% win rate, I'll take it. Trading is only about one thing and one thing only. All about making money. I do not care about if you use indicators, bots, price action, RSI, Mete or ATR. I really do not care. Do you make money or not? That's all matters. Then why use price action? The reason that I use price action, it gives me the best entries and the best targets. It just increases my profit margin. The problem with indicators and chart patterns, you enter late and exit early, and you do not make much profits. Okay folks, another adventure ends here. As I mentioned before, 3 months of paper trading, 3 months of small amount of cash or risk, 6 months of profitable experience. This is how you are going to improve your day trading and scalping skills. I hope you subscribe to the channel and like the video. Please take care and see you soon.